All right, I think we are live, and today we are going to answer a question that is starting to come up in economist circles, and there's something odd happening with some companies that are resisting increasing wages to attract more workers. Now, in our previous videos, we already talked about how the pandemic and the lockdown has made it very difficult for many companies to secure workers, certainly qualified workers, because the business is going up, the economy is growing at a relatively rapid pace. So you might think, according to the recommendations of economists, the number one solution would be to increase wages, right? And yet we see in the data that some companies are actually resisting that. So if you're out there looking for a job and you're kind of wondering, what's going on with your particular profession, your particular position, and why nothing is moving, this might be part of the reason. So, anyways, we're going to tackle that question, and then we're going to crunch the numbers, and I will give you my final thoughts and takeaways. But before we do that, let me just quickly mention that I know I have not been uploading for the last couple of weeks. It's because I've been sick. No, it's not corona. I'm fully vaccinated, so I think that's very unlikely. And I had a cold, but I didn't think you guys would want to hear me sneezing and coughing and all that kind of stuff. So I held off on that. I'm still having a little cough, but I'm feeling much better. So let's crack on with the actual topic. Okay. So, like I said, there's something strange going on with the companies that are out there who are, you know, not increasing wages in response to the labor crunch. And we're going to get into that right now. Uh, so first, let's keep in mind that because of um, the pandemic and the subsequent recovery, right? Um, Job openings are at a record high, 9.2 million openings, right? This is information that's coming from Indeed.com. Excuse me. Um, and that 9.2 million is a huge improvement from April 2020 when there were 5 unemployed per opening. So 5 people were chasing one particular job opening. Now it's 1 to 1, and that is something that I rarely see as an economist. Right? It's an unusual circumstances in our economy where there's theoretically a job opening for everyone who is actually looking for a job. Obviously there are issues with fitting the background and the skills to a particular job. So it's not a straight mathematical 1 to 1 matchup, right? Obviously, you can have some industries where they're lacking in skilled workers, even though there are a lot of workers out there, but they're not suited for that particular position. So it's not quite as simple as that. But this is huge. 9.2 million job openings in this country right now. So there's a lot of opportunities to find employment, right? And that shows you the urgency that I'm sorry, that companies are feeling to find wages. So, and you saw in one of my previous broadcasts that the wage growth, especially for transportation and for retail operations, was increasing massively. So, you know what? Let me actually bring up that graphic because I think that would be uh, wait a second. Um, okay, sorry about that. Never mind. I'm gonna just crack on. Um, so here is the data with regards to the job openings, and it's important, I think, to kind of look at what's happening here. Obviously, right here, 2020, we had a massive drop in job openings, right? We all know what happened, right? But look at the state of the recovery right now. We are at a record high, 9.2 million, as I keep saying. And it's the same thing in this chart. Okay, what are we looking at here, right? This is obviously job openings. Um, this is hires per job opening, which is basically what I was saying before, that hires basically means people, number of people looking for a job per particular job opening. And of course, that spiked really high during the pandemic, right? And it's now coming back down again, corresponding to the job openings that are wrapping up here, right? And so when you look at the actual data, right? In May, the ratio of hires to job openings fell to an all-time low of 0.64, right? Um, so there are by this ratio, there are not enough people to fill all the job openings that we have. Again, going back to the question, why is it that companies are not increasing wages, right? And part of the reasons why we're having so many issues with people um, not wanting to rejoin the workforce has to do with concerns about the coronavirus, safety protocols, childcare issues, and there may be some impact about based on the unemployment benefits, right? In two of my previous videos, I dug into the data on this in terms of exactly how much impact do unemployment have on the reentry of people into the job force. My analysis, my conclusion, it's not zero, but it's pretty muted, But it's there, and lump that together with all the other concerns about job openings. We have that issue. Another reason why you know, uh, job openings are not filling up rapidly is that the pandemic encouraged many people. In fact, the estimate is that 1.7 million people. I think this comes out of the analysis from U.S. Census Bureau. But anyways, um, 1.7 million people leaving the workforce is significant. That's not always something that's emphasized and discussed in the news media, you know, but that's definitely something to consider, right? So let's crack on. Um, and more data from Indeed.com, which is basically showing that postings are coming along with hiring incentives. Whether it's increased healthcare benefits, signing bonuses, extra holidays, what have you. Employers are increasingly offering more and more incentives for people to sign on. Although it needs to be emphasized that incentives are temporary; they're not the same as an increase in hourly wage or increase in your salary, right? So, this is a hint as to some of the reasons why a company might be reluctant to increase their long-term salary. But anyways, so given the condition of the labor market right now, obviously layoffs and firings at an all-time low. Now, why is that? Well, I've looked at a number of research in terms of companies hiring new people versus retaining workers, and it's simply common sense, which is also validated by research, that retaining workers is a lot less expensive, a lot less costly to companies, right? You already know who they are. They know you. They know your work, right? So they're immediately productive. I'm talking about people who are already working for those companies, right? And if you hire new people, there's a 6 month, even up to a year training period where they need to learn a lot of new skills. They need to learn company processes. You have to invest in their training and wait for them to become productive. So it's actually a very expensive proposition to acquire new workers, right? And of course, in this current environment with the labor shortage, it's simply a necessity. Companies are going to have to bite the bullet, but certainly it makes more sense for them to spend efforts on retaining the workers that they have as opposed to trying to recruit new ones, right? Um, excuse me. Like I said, I'm still coughing, but in this particular labor market situation, we're talking about. You remember how I was saying, as an economist, we always view a shortage as a temporary imbalance between supply and demand, right? In this case, the demand for workers and the actual supply that are entering the workforce. So the fact is, rarely have I seen this much leverage in the hands of employees in terms of negotiating for salary increases and bonuses and what have you, right? I think this is at a historical point right now. And certainly the companies are being vocal about it and talking about it and letting people know, hey, we're having a lot of problems right now, right? So looking at some of the data here, I love charts. I love graphics. I think they convey the message very well. Look at the layoffs right here. Obviously the pandemic, right? The same spike that we saw, sorry, in the previous graphic, um, and now layoffs are dropping um, to below the historical norm, a little bit below. Same thing here, right? Share of departing workers who quit. Well, when you're on lockdown and you are um, feeling nervous about your job, you're not going to quit. So here we go. Boom, right? It dropped down. No one wanted to quit during the lockdown and the pandemic because everyone's worried about holding on to their jobs. Well, that's not the case anymore, right? So you've got um, the share, among the people who have left the workforce, who've left their job. I'm sorry, left their job. Um, 60, let's call it 69, 68% of them quit voluntarily. It was the workers deciding to go somewhere else, right? That's also at a historical high right now, reflective of the negotiating power and what they perceive as to be the prospect of getting a better job or a better opportunity, a better career, right? And basically, yeah, quits are at record highs, and workers are seeking better opportunities. In some of my previous labor market analysis, the videos that I did, I talked about all the various factors that are driving this. I went into detail about that. So if you're curious about it, check that out. And of course, as we noted, the share of departing workers who quit is 67.8%. It's the second highest ever since this metric was being recorded. And quit rates are particularly high in lower wage service jobs like those in the leisure and hospitality industry, which likely reflects some trading up to better positions, right? So, in one of the first labor market analysis that I did, I showed you that graphic, how real wages for low income workers, particularly those without a college degree, without even a high school degree, it's been really, really rough, right? Their real wages have not gone up since the 1980s, 1984, right? So this is finally an opportunity in this pandemic recovery economy to say, hey, you know what? I'm much in demand. It's time for me to trade up, right? And so we're talking about a lot of pressure, right? You know, on the part of companies to offer up something, right? And as it says right here, in terms of the big picture of the labor market economy, the balance of power in the labor market is unusually slanted in favor of workers who are asking for raises. They're getting poached by competitors. They're switching careers. And in many cases, they're retiring. As I said, 1.7 million people have left the workforce because they're of an age where they feel like, you know what, given the current state of the economy, and I'm really not looking forward to working in a place where there's concerns about COVID safety protocols. It's time for me to retire, right? So all of that is putting a drain on the market, which brings us back to the point of why is it, given all that we said before, right? Why is it that companies are still reluctant to increase wages? I mean, not everyone's. Some companies are increasing their wages. They're getting the workers that they need. But there are some companies, according to the data that we've seen, that they are still not increasing wages in response to the tight labor market, right? And here, as the text says, there appears to be a disconnect between companies complaining about labor shortages and what they're doing about pay. The bias in the labor market continues to favor workers and their wages, right? So it's making the point that there are lots of companies that are screaming about the fact that they can't find workers, but a substantial subset of them are saying, hey, you know what? I still want to increase wages. Okay. And why is that? Right. So let's talk about that. Um, so one of the biggest factors that you have to consider is that if companies pay new workers more, right, it does cause discontent and complaints among some of the older workers, the people that they need to retain, right? And remember, I was saying it's much cheaper and more productive and more profitable to retain workers than it is to acquire new workers, right? So even if they increase their salary, right, what's happening is that the companies are aware, the management is aware that the current workers are going to know about this. They're going to know about the increased salary. Word gets out. You know how it is, right? And so when you increase wages for new workers, you typically have this pressure to increase wages for the people who are currently working, the people who already know your company, who are the most valuable, in fact. And there's a lot of pressure to retain them. And given the fact that so many people are quitting their jobs, right? You saw that survey that said, over 90% of people in this current economy in this country are considering quitting their jobs. It puts a lot of pressure on companies because they're kind of stuck between a rock and a hard place, right? They want to attract new workers with higher salaries, and yet they turn around and say, we've got all these current workers and we might have to increase their wages as well to match, at least match the new people that are coming in. And so the total cost of the company is not simply the 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 salary for the new people, right? It's the increase for the current retained workers. So I'm sure that's not the case, or that's not a necessity for every company, but certainly there's a lot of companies out there who would be faced with this situation. So it's part of the reluctance that they have in terms of increasing wages, and that's why you're seeing this graphic. Where was it? Yeah, where companies are trying to lure in workers more by the incentives, which, like I said, are temporary, right? And they don't have to worry about increasing the regular salaries of the retained workers. So if you're wondering what is especially driving um, this thing where companies are offering more and more incentives, especially relative to salary increase, that's what's happening right now, right? Incentives are the first step, and they're trying to see if that works. Will that attract enough workers for us to fill our need, as a company to increase our production, right? Um, and then I think many companies are going to salary increases as a last resort. Okay. And the other thing that is also of consideration that you might want to keep in mind is that there are supply chain issues in many industries right now. There's a talk about car manufacturing being stuck in low gear because of computer chip shortages. And in some of the other videos that I did with the inflation, I talked about what's driving inflation and uh, what's driving all these supply chain shortages. And so, if you're curious about an in-depth analysis of that, go check that out. I talk about it in detail. But one thing to consider is that companies, given the fact that they're having supply chain issues and inventory shortages, they're sometimes saying, look, even if we hire these workers, they have nothing to do. We don't have the raw material for them to work on, um, and there might be other supply constraints that of which we're not aware. So, given those two factors, right? Not every company is going to encounter both issues, but imagine if you're a company that would have to increase salary for retained workers, and even if you got new workers, you're trying to solve supply chain problems where it's still difficult to ramp up production, right? So that's the overall theme of why some companies are still dragging their heels about raising their salary. I think in the end they're going to have to bite the bullet and simply make it happen because, like I said, it takes time to bring employees on board, have them trained, get them familiar with their company processes. So in the end, I think, yeah, the upward pressure on wages will continue for the foreseeable future, certainly for to the end of this fiscal year. So if you're out there looking for a job, that's definitely good news, right? So because one way or another, you're going to switch careers, you're going to switch positions, um, and you're going to find better opportunities out there. So I know it's still rough for many people out there, right? But in this economy, like I said, I've rarely seen so much negotiating leverage on the side of of workers, right? And so this is your chance. If you want to make a major move in terms of your career, changing professions, going to a new company, um, this is definitely one of the best times to do it. Anyway, so that's my analysis of the labor market right now. I'm going to do more videos about new data that's coming about labor markets. I'm going to talk about how inflation is impacting real wages. I'm going to talk about the housing market. So I'm back on track. I'm over my little cold, and so I'll continue with regular uploads in the coming week. So, anyways, I hope you enjoy that, and I'll see you in the next video.